Welcome to the On Purpose Investor Podcast with your host Eric and Tiffany Vogel. We've spent several hard years building a rental property portfolio so we can have more time with our family and live our ideal life. Now, finding your path can be difficult, so we're here to guide you along the way with lessons, tips, and tricks to design and implement your dream life. Now, sit back, turn up the volume, smash that follow button, and get ready for this episode of the On Purpose Investor. Hey Pathfinders, and welcome back to the On Purpose Investor. I'm your host, Eric, with my beautiful co-host,
Tiffany. I feel like you forgot that you were supposed to do.
Nope. Just
I don't get any accolades today. I'm just here.
No, I said beautiful.
Oh, okay.
That'll work for today.
Oh.
You know how I really feel. Okay.
Yes, of course.
Well, welcome back to the On Purpose Investor Podcast, where we like to talk about hyper-intentionality and diving into things that will help you to become a more intentional and on-purpose investor, where hopefully we give you the tips and tricks and a little know-hows on how to either get started or keep moving within your investing business. And we primarily talk about real estate investing, but here and there we are likely to talk about other things.
Yeah.
But today, episode 30, investing in an uncertain market. So today we're going to discuss what being in an uncertain market is like. And when I figured out what we were talking about today, and I was like, what is the little funny thing I'm going to mention? And what immediately popped in my head is this little image that's circulating the internet. It had been doing it recently, but it's even more so now that, we all feel like we're on the brink of something big with our market and our economy. And once this airs, we might already be in the spiral, no matter where it is. But the image I'm referring to is this stick figure guy, and above it, it's like millennials. So the stick figure guy represents millennials. He's got a stick, and he's poking these cartoon houses with the little bar graph over. Is it a bar graph?
Yeah, line graph.
Little line graph above the houses, and it's like going up, and he's poking the houses, and he's saying, "Come on, collapse." So it's kind of funny to me.
Yeah, I think it's millennials trying to buy their first house or maybe upgrade because they're starting a family.
Or maybe they're trying to get into investing.
Yeah, and they're just waiting for the market to collapse so that they can buy at a reasonable price or what they deem to be reasonable. Yeah,
by and large, most millennials were, 25 or under in 2008. I'm not sure how that lines up on millennials,
the
but
official.
Well, the official millennials. But, Tiffany and I are pretty much smacked in the middle of being a millennial, and we were graduating high school when the last big housing crisis hit. So we didn't experience it as investors. We did experience it in other ways, just getting into college or just starting our working lives, getting jobs. So we did experience that. I know these days there are jobs everywhere, but back in 2008 through 2010ish, it was hard to find a job. Yeah. Even before then, like 2006.
Yeah, I remember graduating college. I graduated in December of 2011, and I was terrified I wasn't going to be able to find a job because the economy just still hadn't recovered. Yeah. Took the first job I had, and it was underpaid, but it was a good job, so can't complain too much. But
well, back then, you would take pretty much anything.
I got the offer before I graduated, so.
And you weren't in a position to argue salary.
Right.
Back then, it was, did you get your foot in the door?
Yeah.
I remember I applied like 15 times to Target when I was in high school. This was like 2006, 2007. And I had to bug them and call them and keep asking them, can I get the job?
And you took a night shift too.
And I took a night shift stocking boxes on the shelves in the supply in the back.
And you were working at the vet.
And I was a veterinarian technician where I would help out the vets.
And you were in school.
And I was in high school, so I worked. I worked 2 jobs and went to high school. It was fun. I enjoyed staying busy. Yeah. And there were reasons why I stayed busy, but that's for a whole different kind of podcast. But I just enjoyed staying busy and staying out of the house. So
yeah, but you
enjoyable.
had to fight to get that job at Target.
That's right.
Now you could probably go apply and get it pretty quick.
Yeah, most places out there are begging for employees.
Yeah.
They're not in a position to where they're waiting very long to fill slots if there are people even looking for jobs.
Right.
Because right now it's such a unique position to be in I guess if you're out there looking for a job, because there's so many opportunities. Now, the opportunities that are out there may not be exactly what you want, but it is so strange to just drive through town and see all of the help wanted signs.
Right. Because when we were coming up, you had to fight to get any kind of job.
We didn't see that.
Right. But now the economy is shifting.
Yep.
We see changes happening. The Federal Reserve is increasing rates.
Mm-hmm.
We're recording this a little bit ahead of time, just during our podcast break, trying to get ahead of things. So by the time this comes out on October 4th, I'm not sure where things will stand. We don't have a crystal ball to see, but
right.
Things are definitely shifting.
Yeah.
And there's a lot of uncertainty in the market. And a lot of people are saying, oh, I'm going to wait for the market to crash before I get started.
Well, no one has the crystal ball. No one has
Right.
the perfect crystal ball that says the market is going to do this. But we do have friends and colleagues that went through the '08 crisis, that went through the '80s, that went through the '90s, and saw all ups and downs. And what they're all saying is this is very much like some of them, but not like any of them.
It's a little bit
Yeah.
like each of the crashes that have happened over the last 30, 40 years. So,
and while each of them have their own speculation, it is just that. It is a speculation. And, anything could really turn the economy one way or the other.
right. No one predicted COVID happening.
Right. Or you could, a crazy country could bomb another country, and then boom, there is another war, and that's going to drive the economy somewhere. Right. Or, I don't know, something natural disaster-wise happens and crushes the economy, and just drives it in a direction.
Right.
So it's just, there's no crystal ball. There are speculations, and sometimes there are very healthy speculations that can help you to try to prepare for that outcome.
Right.
But you should never dump all of your eggs in one basket of speculation. You should feather your nest in a way to be prepared for something like that. But I wouldn't put all of your birds in that, or your eggs in that bird basket.
Right. So for a new person, or even an experienced investor looking to get more real estate assets, what do they do when they think the market's not in a good spot, or it's too expensive right now? Prices were, 30% cheaper last year, so I'm going to wait for prices to go down. Or you're just in general scared there's a collapse coming. What are they supposed to do? Should they wait, or should they jump in?
Well, it all depends on their risk factors and their income stream and their amount of savings. If they buy a house today and it cash flows today, it cash flows positive today, then, how much it cash flows is where it's going to tie into what is your roadmap.
Right.
And where are you headed.
Right.
If it cash flows $100 and that's what your criteria was, then that's a good deal for you.
Yeah.
But if you needed $500, then that's not a good deal for you.
Right.
Or, we talked on past episodes, figuring out a way to make a house cash flow, forcing a house to cash flow by using it in a different way other than a single family rental.
Right.
And maybe that is an avenue you want to pursue.
Yeah. Yeah.
There are the houses are 30% more on average in our area.
Right.
I know some markets are 50 to 100% more. But, in our area, you can cash flow on a house, especially if you set it up in a unique way.
Right.
There's the crash pads. We live pretty close to the Atlanta airport. And so crash pads are a big thing. And right now, airlines are hurting for pilots and flight attendants. And so there's a big hiring going on right now, and there's going to be a huge surplus of new people in the industry. And when they fly to different cities and they have like a 1 night or a 2 night, layover. I don't know what they call that for pilots, but I know, for flying, we call it a layover. But where are they going to sleep? And majority of them are set up on crash pads. Our neighbor is a pilot, and he just messaged me yesterday. He's like, yeah, I'm in New York, and I'm in a crash pad for the next day and a half, because that's how long his layover was. And it just rejogged my memory that we are close to a market that would support that. And, if we are getting back into the buying phase, there's no reason we can't buy a house 20 minutes north of us and set it up as a crash pad, because they make similar returns as Airbnbs or as rent-by-room setups.
Right.
So it's just another strategy to invest in an inflated market or a more expensive market and still succeed.
Right.
And reach your goals.
Yeah, and I think So there's all these opportunities to increase your cash flow over a standard 12-month rental contract.
Mm-hmm.
But you always want to make sure that it will still cash flow with that traditional 12-month situation, because you don't know if zoning's going to change or the regulations in that area, or if, that model just doesn't work anymore. Like Airbnbs might crash and burn. I know they're making some changes with company policy that's hurting hosts, and that might not be a great long-term strategy. So making sure you have a plan A, B, and C for that property to make sure that you don't wind up underwater on it is just, I guess, a safe way to approach it.
Yeah, absolutely. And goodness, I forgot what I was going to say, but I promise it'll come back to me.
Yeah, I'm sure it will.
So keep going. I'm sorry.
So I think all in all, the best time to buy a house or a stock or any kind of investment really is yesterday.
Mm-hmm.
The next best time is today. And I know we've said this on past episodes, but yes, the housing prices might decline. But if you buy on the right terms or buy at the right price, it still can be a good investment. And that the right price, the right terms, it's all dependent on you and the strategy that works for you and your market.
Yeah.
But find that strategy that works.
Yeah, for sure.
Have your clear roadmap of what you want and need, and then find a strategy that works for that market. You might have to hustle a little bit more to find deals or get things accepted on better terms to make it cash flow, because you can overpay for a house, but if you get good financing, it's a great deal.
Yeah, I mean, if you paid 30% more for a house, but you're paying 5% less in interest, it may not sound like a lot, but that's a huge difference.
Yeah, definitely. And I guess I just want to say, this is not us giving advice by any means. We have no certifications. We just have a little bit of experience in this. These are just our opinions. We're not forecasting anything in the market, not trying to tell you to go sell all your Airbnbs or anything like that. Just saying this is kind of our perspective on what we see, and want to pass that along to you.
As a good friend of ours would say, is that we are laymen.
Yes.
We are not professionals, and we are, in fact, very stupid.
Yeah.
And you should take all of this with a grain of salt. This is more just discussion points of what...
things to get you thinking.
Yep.
And, there's kind of two types of deals out there. There's deals that are driven by macro trends, and then deals driven by micro trends. Right. And the macro trends are, mass foreclosures or shifts in the market that cause people in mass to lose their homes.
Yeah, like, I'm not well studied on exactly what happened in '08, but I know that there were a lot of notes called.
Yeah, well, I would say it was a lot of short-term adjustable rate mortgages.
Right.
And their payments skyrocketed kind of all at the same time. And these people could no longer afford their house payment. And then when they tried to sell it, they were underwater because prices had tanked so much.
Right.
So then it just created this big snowball in a negative way.
Yeah.
That led to the housing crash. So it was poorly written loans. Now, to qualify for an adjustable rate mortgage, you have to qualify for that higher interest rate, not just the payment at the lower rate. So we learned a little bit, I think, as an industry about how to better prepare for things like that. There was a lot of speculation going on too. So I think at the end of the day, if you invest in solid fundamentals, and there are great resources out there to learn that, I highly recommend starting on Bigger Pockets. We got a lot of information there on their webinars and different books and resources on what the fundamentals are. But making sure you have properties that are solid in the fundamentals and have a good return and opportunity, and again, align with your goals. You might be in a situation where you want to invest for appreciation and you can ride that storm. You might be in a situation where you need cash flow. So knowing what you need and studying and learning and just going with the fundamentals and not the hype, I think is going to be the key to success in the next couple of years.
Oh, that should be quoted right there. Follow the fundamentals, not the hype.
Right.
That's on the back of a shirt already. I can see it.
All right.
It'll be part of the swag store.
Okay. With your sombrero of many hats.
Oh, and the delayed gratification Care Bear.
Yeah. We need to get on that.
Yes, we do.
So going back, the macro trends are the economy.
Right.
So shifts that happen to your market as a whole.
Mm-hmm.
And there's not a national real estate market. They're all hyper local. So what happens in our market might be different than your market. So those macro trends are probably pretty market specific.
Yeah.
But then you have micro trends that are more personal.
Mm-hmm.
So we talk about the 4 Ds: death, divorce, disaster, and debt.
Yeah.
So these are things that derail people's personal lives and cause a move. And there's also positive personal changes, adding children. I know we've got a baby coming. If we decide for a third, I don't know that the house we're in right now is going to suit our needs. So we'll probably be looking for a new house at that point.
And if we were in a situation where we didn't have a lot of income, adding another child could mean that we need to hire a babysitter, or it might mean we have to send our kids to a certain kind of school.
Right.
And it might hurt us financially and have to downsize the house.
Right.
And it might put us, in that trend of having to sell because we had a positive thing happen, but now we have to adjust for it.
Right.
So,
right.
Yeah.
So there's a lot of situations that can cause people to be motivated to sell their property. And with that motivation comes the opportunity to make a deal. Mm-hmm. And it's a win-win situation. You're not trying to pull one over on this person or anything like that. You're trying to help them solve their problem. And you have to solve your problem, which is, I'm assuming, some kind of financial gain for you. But at the end of the day, it's a win-win situation, not something where you win and they lose.
Yeah, what I've found from talking to hundreds of people in this industry over the past, 5 years is that if you're in this business for the right reasons, which is to help people solve their problems, you're going to be able to experience a much larger level of success than those that are just chasing the dollar.
Right.
You've got to be into it for more than just income. You've got to find some type of joy and fulfillment that comes with solving people's problems. Because if you're in it just for the money, and you're not willing, not just not willing, but and you're not experiencing, personal, satisfaction for solving people's problems, then in a very, delicate market, such as, a market where there's a lot of foreclosures, or a market where you're trying to find houses where spouses have died, if you're not at that kitchen table or on the phone or, somewhere talking to that seller, that potential seller, and being able to truly express your sincere interest in solving their problems, you're not going to get that lead. You're not going to get that home. Who's going to get that home is the person that shows up and shows them that you really care about solving their problems. And I'm not telling you to fake it. I'm telling you to actually mean it. You got to show up and say, I'm very sorry for what you're going through. And I understand it's tough. And yes, my business is buying rental properties, or my business is buying houses to flip, right? And you share that up front. You say, that is my business. But my business is also to get you out of this situation and get you into a better situation. And so you got to truly mean it.
Yeah.
And you got to be able to convey that when you're talking to them. And you can't convey falseness. You can't convey that you really want something better for them when your previous actions have said everything but that. Right. You got to make sure that all the relationships that you have built up to that point are positive as well. And that everyone that say it's Sally that you're buying the house from and her husband passed away, and she's like, well, I don't know, I don't feel good about it. You want to be able to tell Sally, call my friends. I want you to call my friends and past people that I've helped out in these situations. You want Sally to be able to call them, and they pick up the phone and say, you got to work with him, or you got to work with her. Yes, he's going to make money, but you're not going to be in this situation anymore.
Right. We had a tornado hit our town a little over a year ago. Mm-hmm. And we lived it with the people in our community, and there were a lot of homes that were devastated. And you were on the Nextdoor app and found a woman who was looking to sell her house, started speaking with her. The house was in pretty rough shape because a tree had crashed through her kid's bedroom. Mm-hmm. and they were just emotionally destroyed, just like the house. I
No
mean,
kidding.
the trauma of waking up in the middle of the night and having a tree through the middle of your house, and it rained the whole next day too. So any kind of recovery was not even, I mean, it was any house that was exposed got soaked.
Yeah.
And I mean, you spent that whole week out with a chainsaw helping people get out of their house in some situations, out of their driveway. I mean, it was devastating.
Yeah.
And you worked with this woman for what, a month maybe?
For about a month and a half.
Yeah. And she had other offers that were higher than the price we could offer, just given the damage to the house and what we could do with it. But we coached her along on like, hey, here's what's going on with, this. Here's the offer we can make. Yes, we are investors, but we lived through this with you. We understand how you feel. And it was really trying to create a win-win, and it didn't work out, which was perfectly fine. We're happy that they were able to move on, and they could not fathom rebuilding their family home because of the trauma that came with that disaster.
They ended up going with a buyer, I believe, that gave them probably about 15 grand more than us.
Yeah.
And that buyer might have had that ability to spread.
Right.
Because when you're buying a house for an investment property or a flip, you've got to have your bottom line. And you got to make sure that the time that you're putting into that property is going to be worth, the money that you're going to be otherwise opportunity costing away.
Mm-hmm.
So we had our bottom line, and we were very upfront about it. We say, this is our bottom line, and I understand you got an existing mortgage to pay off, and I know you got your needs. And I said, well, and we were just very transparent. I said, this is our line, and they called us several times.
I mean, you were talking on the phone with her for 20-30 minutes at a clip, like just talking about family and the experience of the tornado.
I think we ultimately did save her from some wholesalers. That did not have her best interest in mind.
Right.
I think she did end up selling to another investor that either flipped it or now owns it as a rental. Mm-hmm. So, I'm just glad that we were able to help her understand the type of investors there are. Right. Because a lot of people just think, real estate investor, they're all flippers. Or real estate investor, they're all landlords.
Right.
There are a lot of different ways to be a real estate investor. And our goal was, and we felt like it was our duty to just educate her.
Yeah.
Because she was a part of our community and went through something very tragic, just like we did.
Right. Yeah. So that was I guess you could say that was a macro trend in our market, because that disaster, I think it destroyed a couple hundred homes. Yeah. So in a market, like changing market, yes, the economy is uncertain, but there are still people dying. There's still people going through divorce. Mm-hmm. Still people in financial situations. Who knows what's going to happen with student loans, where we're at the end of July when we're recording this. So we're kind of waiting to see if anything's going to happen there.
Right.
So by the time this comes out, you guys know in the future what's going to happen with that. But, there's a lot hanging on these big trends that are macro, but impact you on a micro level.
That's right.
So there's opportunities even in a high market.
That's right.
So find the strategy that works for you.
Yeah. Yeah.
Door knocking is a great strategy right now, because you really get to know people in the neighborhood and the community and can find a lot of information.
That's right.
So,
but there is a strategy that works in every market. Mm-hmm. You just got to be very smart about it and diligent.
Yeah, right. For us, when we were really starting and investing, adding value through burring was great. And we were able to get really good financing.
Yeah.
So that worked for us. So find what's working in this market and really educate, and then take action.
That's right. Absolutely.
And we've only purchased one house this year because we've been focused on creating great content like this podcast and getting our book out and things like that. So the one house that we did buy this year, we thought it was higher priced than we really wanted to pay. But we were willing to pay it because we knew the fundamentals worked. It cash flowed. It hit our criteria. Mm-hmm. And we knew in 3 years, we were not going to be upset that we bought that house.
No, I'm very happy we have that house. And, the people that live in that home are very happy to have a place to stay.
Right. And
So-
we added a lot of value to it, though, by adding a bedroom and converting a half bath into a full bath.
Mm-hmm.
So that's where we were confident paying, quote unquote, over market. But in the long run, it was a good choice.
Yeah.
So if you're investing for a shorter term horizon, or if you're flipping, the current price really matters. But if you're investing on a longer horizon, spreading that additional cost over a 30-year mortgage is not going to have a huge impact on your cash flow.
Yeah.
So,
Oh, that reminds me of what I was going to say earlier.
Circling back.
Yeah. If for some reason the market does change and let's say your Airbnb shuts down, when you entered into that property, if you strategized and said, okay, it's going to negative cash flow as a single family home. Let's say it negative cash flow is $400. It would be very wise for you to say, okay, this $400 from my W-2 income is going to be dedicated for that property just in case.
Mm-hmm.
Absolutely dedicated to that property just in case. And when the market gets to a point to where it will cash flow as a single family rental, I will no longer allocate this money from my W-2, my job, toward that home. Now, what I'm saying is use that $400 a month from your W-2 and put it in the bank for that property.
Right. Yeah, and
just to carry
whether
it
it's from
just
your
in case.
W-2 or other investment properties.
Yeah. Maybe you have another house that cash flows $600 a month, and you say, okay, this house doesn't cash flow $600 a month, it cash flows $200 a month, and I'm allocating this $400 toward this house just in case.
Yeah, I think at the end of the day, no matter what strategy you take, the safest way to approach it is cash or access to cash.
Mm-hmm.
Because if you wind up in a situation where you can't continue with that strategy that you've been using, but you've got money in the bank, you can weather that storm a lot easier and a lot less stressfully, and you can sleep at night if you have cash or access to cash. You don't necessarily have to have it sitting earning 0% interest, but if you have a line of credit or financial friends and can get access to that cash, it can make all the difference between going bust and
because let's say
continuing to thrive.
Let's say your note gets called for some strange reason. Say one of your home's notes gets called, because there's a call in most every mortgage.
Yep.
And, let's say one for $200,000 gets called and you still owe $170,000 on the mortgage. Do you have a way to get money? Do you have a way to get 170 grand?
Right.
Because if that note gets called, there's probably some big things happening.
Yeah.
And there's a likelihood that a bank is not going to give you money for it.
Right.
So how are you going to pay $170,000? And that call is probably going to say you got 30 or 60 or 90 days to pay it. What are you going to do?
Right.
That's where relationships are huge and important. And having financial friends are huge and important. You might go from you owning a great investment property that brings you $500 a month to you now share that home in an LLC or a trust with 5 other financial friends, because that's how many people it took to rally up that $170,000. And now you just have a piece of that pie. But you've got to have those strategies in mind for when those situations arise.
Yeah. Well, we were playing the game cash flow, and we were winding down the game. We put a time on it because we could have stayed up till midnight playing, but it was pretty much the last deal of the game, and it required a $40,000 down payment. And the person with the card could not afford that full down payment.
Yeah.
So she went around the circle and asked everyone how much cash they had to see if we could come up as a group with that down payment, and then we'd figure out how to split the deal.
Mm-hmm.
Turns out it wasn't going to happen. There wasn't enough cash available.
Yeah.
But
and just so you know, we had 2 different families over to play cash flow with us, and there were 8 players during this game. Yeah, so there was a lot of players for this game. But like you were saying, I'm sorry.
Yeah, so we tried to pool the money together, couldn't do it. So we lost the deal. But the willingness to share a piece of the pie was so interesting to see and so cool. And
there were some high schoolers there playing with us. It was awesome. Yeah. Because, one of the very first deals came up, and one of the players who was a high schooler said, I can't afford this deal. So he was going to put the card back, and I said, wait a second. Do you want to sell that deal to someone else? Or do you want some help And I remember I went in, this was a fun card to do because there was like this duplex that came up, and him and another player had all of the money raised and they were going to split the deal. And I said, hey, what if I come in as a third party and I just give some money and I don't want any of the cash flow? I just want the ability to capture some of the upside if there is ever a buyer. And I didn't put a lot of money into it. It was like $2,000 in the game. But later on in the game, like an hour and a half later, my $2,000 became $15,000, $20,000 in the game. So there was a teaching opportunity there to show them that you don't always have to get the cash flow, or you don't always have to get the asset, or you don't always have to be the individual owner. There are ways to partner and to have, professional relationships within a business that own properties, and, everyone wins.
Right.
So it was a fun learning moment for them, because they even said, I would have never thought of that. And it's great to just open their eyes to that.
Yeah. Yeah. So with the changes in the market and investing in this uncertain market, having key relationships is key. It's important.
Hey, it's key.
Yeah, like the key to unlocking your dream life.
Hey, Pathfinder's journey.
Yes.
Nice little drop.
Yeah. So I think no matter what strategy you approach, make sure you have some kind of reserves available to be able to weather the storm.
Yeah.
Anything else from you at this point?
Cash or access to cash.
Yeah, definitely.
And just know, don't believe everything you hear on talk radio or on podcasts or in books when it comes to predicting markets.
Yeah.
It truly is nearly unpredictable until you get right up close to it. Once you're a few months away from a market turn, there are going to be indicators of certain things happening. There are going to be certain indicators saying, these companies are doing this, or this type of market is doing this. The jewelry market is doing this, or the car market is doing this, so that might indicate this. There will be some leadway into something like that, but there won't always be.
Yeah, I think you're right, but you're forgetting the wild card that is the U.S. government.
That's right.
And it's like playing poker, and they're playing with they're playing with Magic the Gathering cards, and they just throw down a goblin or something. I don't know anything about magic.
Goblins are real.
And vampires,
in
right?
Yeah. Goblins, vampires.
Yeah, so you're
mermen.
playing with a certain deck of cards, and then all of a sudden there's a goblin thrown at you, and you're like, what the hell is this?
Yeah.
So just
when you think a market's about to do this, then, the Federal Reserve drops a $40 trillion surplus into that market.
Or COVID happens. I mean, I don't think anyone could have predicted that.
Right.
So there are so many factors that, yes, it might seem like the market's trending a certain way, and then that goblin comes up and
it's like, whoa, didn't even know that was a thing.
So I think, to me, the safest way to be prepared is having the cash or access to cash so that you can respond, because a problem becomes less of a problem when you can solve it with money.
So essentially, feather your nest, build relationships. When I say feather your nest, that means have cash or access to cash.
Okay.
Right. So that's a Bill Cook term that I've heard from him. Feather your nest, and then begin different educating, efforts for different types of markets.
Right.
And then build key relationships with people that can help you achieve your dream life. And then wait.
Yeah. Yeah.
And then, analyze deals as they come and do the ones that make sense and align with your roadmap to get to your dream life. Right. But otherwise, stay vigilant.
Yes.
Stay diligent.
Definitely.
Never stop educating. And don't believe everything you hear on the radio.
Right. Yeah. Educate, but, kind of trust but verify everything.
That's right.
So, all right. Well, thanks, y'all, for hanging out with us and listening to us talk about how to invest when the market looks uncertain. What lessons can you take from our experience and apply to your life? Don't let the time you just invested go to waste. You only get one life, so live it purposefully. That's all we have for you today. See you next time.
Thank you for tuning in. If you have any questions or comments, we'd love to hear from you. Head over to onpurposeinvestor.com and sign up for our newsletter to get all the latest updates. If you haven't already, we'd really appreciate an honest review wherever you watch our podcast. All right, now go smash that subscribe and follow button for more tips on building your dream life. See you next week, Pathfinders.